Bitcoin's price has dropped by approximately 18% this week. We have not yet closed under the break-off structure, which we discussed in the last video, where we said that there is a good possibility that Bitcoin will break this swing point. We consider it to be an official break-off structure when the close of the time frame is under the value over here. The break-off structure would happen at 60,132, and we are right now at 60,819. What we saw on the daily time frame is pretty much back-to-back a negative day or a red day. So what exactly would be the pattern or the strategy to analyze the Bitcoin price action at this point? In one of the past videos, I discussed the oscillator called Indian oscillator, and to be specific, I was talking about this oscillator on the monthly time frame. The idea here was that Bitcoin bottoms after the bullish component of the Indian oscillator has reset to zero. Now this we did it by dividing the whole Bitcoin price action as per 4-year cycles, 4-year cycle chart. So here we have accumulation lines and distribution lines. These were analyzed as per the weekly time frame, where we said, all right, let's make it a bit smaller to grasp the whole view. All right, so the idea behind the accumulation lines and the distribution line is whenever the price crosses the distribution line, it is basically confirmation that we are in a bear market. We saw it in all of the previous cycle. And in August, in the video in August, we already said that for this cycle, our distribution line is on 20th October, in the week of 20th October. So if you get a high, it's a good time to get out, take some profit. We got some nice price action, all-time high at 120, 122. And then we saw some kind of pullback. And at that point, the narrative was, it's just a small pullback and we will continue towards 500,000 because it is Bitcoin's super cycle. Well, that did not happen. So price crossed the distribution line and it continued to stay in the downward trend up until now. What previous price action tells us is price continues to stay in this bear market up until it has crossed the accumulation line. And this does not mean that whenever it crosses the accumulation line, the bottom is already in. No. We form the bottom after the price has crossed the accumulation line. The idea here is that accumulation period starts at this point when the price has crossed this particular line. For this cycle, the accumulation line is in the week of 21st September. To be exact on which date it falls to, that is 27th of September. Basically the last week and beginning of Q4. There are quite a good number of theories out there where it is mentioned that, all right, we had the all-time high in September, October, so the bottom will also be in October. But to be more specific, when in Q4, or will it be in October or November, we had one more set of lines, and those were the pre-election years. Right now we are in the midterm year, which are historically always bear market for Bitcoin. So, but distribution lines and accumulation line model gives us a bit more accurate timing compared to midterm year and pre-election years. So as per the accumulation line and pre-election year, this kind of narrows down when is it most likely that bottom would occur. In past cycles, bottom always occurred when price action was between these two lines. In 2022, it was in November, or perhaps this one that was also in November, almost the last week. In 2018, it was in December. Over here, the lines are switched, but it still occurred. If you consider close of the candle, it occurred in January. It's not necessary that it will be always in Q4, because here we saw it happened in January, which is Q1. So here in the last cycles, yes, it was Q4, but for this one, it can happen that it is extended and somewhere at the very end or in first week of January it would occur. That would basically be stretching this pre-election year and accumulation lines time frame. Basically, that would say the model has failed. But assuming that this is what it has done, and right now pre-election year and accumulation lines are not flipped. Over here, they were flipped. So at one point, perhaps in the future, these lines will be flipped so that the accumulation line again falls somewhere in January and we might see it in Q1. But for this particular cycle, this particular model tells us that price, whenever it will be here in this, between these two lines, the bottom might be there. All right. Now, looking at the Indian oscillator, we said that over here, during the bear market, the bearish component is pretty strong, and price never starts going back up until the bullish component hits 0 on its monthly time frame. Every single time in all of the cycles, over here looking at from the first mature cycle, the bullish component hit 0 exactly at the start of the year. In this one, the bullish component hit 0 between the accumulation line and the pre-election year line. Over here, it was during the bear market. And we are already at this point where bullish component is 0. That, in some sense, is the good news, because we are not that far away from September, so price crossing the accumulation line. And in one of the videos, we said it's quite likely to be in the middle of this period where the bottom would occur, and that the middle comes to in the first week of November. So October, last week, November would be the point when the bottom is already in. That would mark as a good time to accumulate. To the narrative which says we already are at the bottom, that this is the bottom and price will continue its new bull trend from here. In some sense, it is an incomplete analysis, because I think the same people said the bottom was in and price was at this point. And it did not stay there. There was a break of structure. There was a small pullback. Price went to 60,000. We saw another pullback, and now we are very close to this point. If we look at the weekly time frame, considering some very naive price patterns, what we have here is price going down. Then we have this rally. Again, price going down, another rally, and breaking of this price. Usually these rallies are to be considered, if you mark them like this way, this pattern is considered as a bear flag. The bear flag happens most of the time during the bear market years, and that is basically when the price has crossed the distribution line, and it continues to do that until it has reached accumulation line. It's quite possible that we might see another rally, then another price going down, going sideways, one last drop in the price, sideways for a few weeks. Then we start our next bull run for the next 3 years. I think that would be all for today's analysis. If you like the content, then do hit the subscribe button. I'll see you in the next one. Bye-bye.